If you take a quick look at the US markets right now, you'd think everything is fine. We're trading right near all-time highs and things feel weirdly calm. But you just have to scratch the surface a little bit and you'll see two massive storm systems that are about to collide, creating a situation that is, well, anything but stable. And that brings us to the central puzzle we're tackling today. We are literally watching a historic challenge to one of America's most important financial institutions unfold in real time. And yet, the stock market seems to be completely shrugging it off. So what on earth explains this disconnect between this profound political risk and all this incredible market optimism? Well, the answer lies in this epic tug of war. On one side of the rope, you have this massive institutional shockwave coming straight out of Washington. Pulling on the other side is a tidal wave of technological hope, with investors basically making an all-in bet that the AI revolution, led by one single company, is powerful enough to overcome any political storm. So let's start with that shockwave from Washington, because what's happening there isn't just a little political drama. It has huge implications for the entire global financial system. And what's happening here, well, it's something we've literally never seen before. In the Fed's entire 112-year history, this has never happened. President Trump has stated his intention to fire Federal Reserve Governor Lisa Cook. She, in turn, has promised to fight that dismissal in court. This whole thing is setting up a major constitutional showdown that really gets to the core of the central bank's independence from political influence. Now, this brings up a really dangerous long-term risk. It's a concept called fiscal dominance. Basically, it's when the central bank's main job stops being about fighting inflation and instead it gets pressured into keeping interest rates low just to help the government pay for all its debt. You can imagine why that's a dangerous path, and historically, it leads to some serious economic instability. And the potential consequences here, the dominoes that could fall, they're pretty huge. I mean, if global investors start to lose faith in the Fed's independence, it could chip away at the US dollar's role as the world's go-to currency. It could speed up efforts by countries like China to find other alternatives, and it could force investors everywhere to demand higher interest rates, a kind of risk tax on all US assets, from government bonds to your 401k. But here's the crazy part. You'd think with all that on the table, Wall Street would be freaking out, right? Well, take a look. Wall Street's so-called fear gauge, the VIX, is sitting down around a calm 14.79. This number shows a serious disconnect between how big this threat really is and the market's complete lack of fear. So why isn't anyone panicking? Okay, so if the market is just shrugging off this massive political risk, what in the world is propping it up? The answer is that powerful counterforce we talked about, where pretty much all the market's optimism is balanced on the shoulders of one single company, which has become the ultimate litmus test for the entire AI dream. And the reason is simple: NVIDIA's total and utter dominance. Look, to say NVIDIA is a big player in AI chips is a huge understatement. With over 80% of the market share, for all intents and purposes, it is the market. Its sales numbers are basically a direct measurement of the health of the entire AI build-out. That makes it the one company to watch for the biggest growth story on the planet. And the numbers that everyone is expecting from them, they are just mind-boggling. For its next quarterly report, Wall Street is looking for year-over-year revenue to jump more than 50%. I mean, that kind of explosive growth, at that kind of massive scale, is exactly what's giving investors the confidence to look right past all those political storm clouds. And this is where it gets really tricky. Simply meeting these gigantic expectations, that's not good enough anymore. The market has gotten used to this little dance where NVIDIA gives conservative guidance and then just completely blows it out of the water. So investors are now looking past the official Wall Street consensus number to the unofficial whisper number, which is even higher. The bar for what counts as a success is just astronomical. And that's why this one single earnings report has become the center of the universe for the market. It's now seen as maybe even more important than what the Federal Reserve itself says. Why? Because this report will either prove that the AI supercycle is real and can power us through anything, or it'll shatter that whole narrative. So you've got these two giant forces locked in a struggle. How is this actually playing out across the globe? Well, it's a story of stark divergence. Not every market is seeing this the same way. You can see it right here. The US market, totally mesmerized by the tech story, is holding its ground, even inching up. But then you look over at Europe, which is way more sensitive to political risk and doesn't have as much of that AI excitement. It's a completely different story. France's market, for instance, has been falling sharply. But even within the US, if you peek under the hood, there are some flashing warning lights.
The stock market might be having a party, but the bond market, which a lot of people call the smart money, is telling a much more cautious and, frankly, kind of pessimistic story.
So what is the bond market telling us? It's basically telling two different stories at once. On one hand, you have short-term bond yields falling. That means investors think the economy is weakening, and the Fed will have to start cutting interest rates soon to help out. But, on the other hand, long-term yields are staying stubbornly high. That signals that investors are still worried about inflation sticking around for the long haul. And that combination, a weak economy plus high inflation, is the classic recipe for stagflation. So here we are in this incredibly fragile equilibrium. The market is balanced on a knife's edge, caught between this political crisis and the AI hype. This can't last forever, right? Something's gotta give. So what are the key tripwires that could finally break this deadlock?
All right, keep your eyes on 4 key things this week. First and foremost, that NVIDIA report. Will it keep the AI dream alive? Then we get key inflation data, which could really complicate things for the Fed. All the while, we have to watch the battle over the Fed itself to see if it gets worse. And finally, keep an eye on new U.S. tariffs that could spark wider trade fears. Any one of these could be the thing that tips the scales.
And that brings us right back to our final overarching question. This market is really caught in a battle for its soul. When the dust finally settles, what will define our future? Will it be the incredible, undeniable promise of technology? Or will it be the profound and growing risks of political instability? The answer is going to define the next chapter for all of us.